So we are looking at the chart of Nifty on the daily periodicity, and I'm telling you that this is the emotion of the market. This does not this shows the price, this shows the volumes, but what we get to understand from this is the sentiment of the market. ये है क्या? ये है क्या समझने के लिए let me take you to this Excel sheet. In this Excel sheet, I have information which we call data. Date, open, high, low, close. When the market opens, it has an opening price. Throughout the day, it makes the highest point. Throughout the day, it makes the lowest point. And then finally, 3:30, it has a closing price. And then din mein kitna volume here means how many shares exchanged hands. If I bought 100, you sold 100 to me, then the total volume is not 200, it is 100. Number of shares exchanged hands. So these are volumes. This is the mother information. This is what the bhav copy is made up of. Date and us din ka price behavior and us din ka volume behavior. This is all that we have from the market. Now what the technical analysts have managed to do, or what Charles Dow did 110, 115 years back, he took this information and turned it into a two-dimensional picture. It has two dimensions in it. In one dimension, there is time, and in other dimension, there is price. 2D, time and price. And all that I've done in this Excel sheet is plotted the closing price. So the moment you look at this picture from 2002 till around 2015, can you clearly see the behavior of Nifty? Up and down and big crash and recovery and etc. and etc. and etc. Yeah, a picture says more than 1,000 words. Is there a difference between Reliance Capital stock and Reliance Capital as a company? Yes? You think so?
It's a derivative.
It's not a derivative.
It's a company's performance slightly reflected in the stock performance.
Let me take you to a wonderful chart of Reliance Industries. Fine. And let me take you a long-term price behavior of Reliance Industries. Okay. Let me take you back to around 2003. This chart is all adjusted of bonus and splits and etc. etc. In 2003, you would have got Reliance for around 70 rupees. Good price. 2003, take 5 years to 2007 top was around 800 rupees. It gave you around 10 times. During this period, if you had Reliance Industries in your portfolio, you would have made 10 times. If I ask you at this juncture, is Reliance Industries, you have so many in your portfolio, is it a good stock? What will you say? Yes, very good stock. Is it a good company? Has to be a good company, or else why will the stock price go up? Why is the stock price going up? Because people are buying it. Why are people buying it? Because they want to sell it at a higher price. So they anticipate it will go higher. That's why prices go up. Fine. The same Reliance Industries you bought in 2009 for around 500 rupees. Take the same 5 years and go ahead 2014. It's still 500 rupees. Same 5 years, a different 5 years, same stock. Now when I ask you somewhere here or here or here or here, why tune Reliance hai na tere portfolio? You have Reliance, so many of Reliance in your portfolio. Is it a good stock? What will you say? No. In fact, it was a very bad underperforming stock. It right around in this phase, most of the institutions were they had the least amount of Reliance because it was not performing. But if I ask you, is it a bad company? No, right?
Company was performing that day.
Company was fine, but the stock was not performing. True? So we need to understand that there is a difference between the company and the stock. The company being good does not mean that you will make good money, right? So as a trader, not as an investor would always want to focus on the company, because an investor does not take calculated risk. What do I mean by calculated risk? If I enter a stock at 100 rupees and if I'm a trader, I will put a stop loss and I'll say 95. If it falls below 95, I'm out. So I'm taking a risk of 5 rupees. But if an investor is entering at 100 rupees with a long term, he does not have any downside calculation. In fact, if it comes down to 95 or 90, he will buy more. So trading करने आता है और investor बन जाता है. So there are many examples where you take a position and you thought it will be a trading position, then it became an investment position. So the point is, an investor will always look into the company. What is the company into? The balance sheet, the management, the sector, the economy, long-term macro parameters. This is your fundamental analysis, conventional fundamental analysis. Yeah, clear? Then you come to the stock. The company was good, the stock was also good. You look at HDFC Bank, Maruti, company is good, and if the company is good and the future is also good, people will definitely buy it and not sell it immediately. So the moment you look at, like she rightly said, Maruti Suzuki, like HDFC Bank. So when you see a chart like this, I don't understand anything about HDFC Bank. I've come from Somalia. I've come from some other part in the world. But when I see a chart like this, and if I understand demand and supply, you're in India, this chart called HDFC Bank, I'm sure it's doing good. Why? Look at the performance of the price. And then if you look at GP Associates, right? What can you say? There's something wrong with this. You look at Punj Lloyd. You understand what I'm saying? So just by the looking at the behavior of the price, you can draw a conclusion about the behavior of the business. I've read a couple of books written by Devdutt Patnaik. Anyone? I don't know if you've read about these books. Devdutt Patnaik. Devdutt Patnaik has a very nice saying, and I heard in a YouTube channel. He said, "Jaisa aapka," I will use the Hindi because he spoke in Hindi. Then I'll translate into English. So please, if you don't understand Hindi, I'll translate it. "Jaisa aapka vyavhar, जैसा आपका विश्वास, वैसा आपका व्यवहार, वैसा आपका व्यापार." In English, it will mean like your beliefs is your behavior, is your business. I strongly believe in something which I tell my kids also, that no matter what you do in your life, I don't actually care that much, as long as you keep a good behavior, because people will always know you by your behavior, not by your Audi or your Porsche or they'll always know you by your behavior. You look at yourself and around. If you want to tell some friend, "Arey, wo tha na wo Chirag, wo gusse wala," you understand? It means Chirag is spotted as someone whose behavior is always anger. You remember that guy who used a lot of slang, you understand? Or you remember that soft-spoken guy? Or you understand what I'm saying? Whenever you say, interact, you're behaving. And by behaving, you're leaving impression about yourself to others. So please take care of your behavior. Fine. So if I look at Punj Lloyd or Anil Ambani stocks like Arcom, fine. This is the behavior of the stock. If this is the behavior of the stock, what is the business? You can understand. And what would be the belief of the management who started a company like this? So isn't it sinking? When you look at, it's not there, let's say the chart of KFA, Kingfisher Airlines, all right? So the belief was something else in the management. It got reflected in the business, and that gets reflected in the behavior of the price. So please remember what we are seeing here, good, bad, good, bad, whatever. This is the behavior of the price. If the behavior is like this, surely the business is doing good.
Which company is this?
Pizza company, Domino's. Yes.
As you previously said, even if the stock price is going down, the company is doing good. How can a company be doing good when the stock is falling?
Good question.
Because the equity is falling, so how is the company doing?
यहाँ तक ठीक है? So far so good.
The result is not good. That's why the
I'll tell
stock
you.
is-
Yes, yes. This is a very valid question. So this is fine as of now. Yeah, I'll just quickly check the online questions. If they have any doubt, then I will take up your question. I'm getting interest in technicals. Which is this course I recommend? Independent trader? Absolutely no. Unmute me, please. But why Rakesh Jhunjhunwala took JP Associates? Okay, I'll take up Jatin's point and then come to your point. I remember still very clearly, Rakesh Jhunjhunwala once said in Z Business, and he spoke in Hindi, and he said that which stocks I buy, I don't even tell my wife. Why will I tell you? And it's very valid at his place. His money, his account, his views, and obviously all the fishes he's going to catch are not going to go right. We only get to hear the news or the stocks of Warren Buffett. You think Warren Buffett, every stock he has picked in his career, everything has gone up? No, you only know about the Pepsi, the Coke and all that. Obviously, Rakesh Jhunjhunwala, LIC, Warren Buffett, you, me, will also have the bad fishes. The only thing is we get stuck to the bad fishes and we don't go for the next one. The difference between Rakesh Jhunjhunwala and you is he moves on. And we don't move on. We hang on to the array. What happened? The stock market is bad, and etc. Tenet number 2 in Dow theory states that you should look into the market in terms of 3 different time frames. Long term, medium term, and short term. Primary, intermediate, and minor. The market has a primary trend. The market has an intermediate trend. And the market has a minor short-term trend. If I ask you, what is long-term as per your understanding? What is long-term?
More than 5 to 10 years.
More than 5 to 10 years. Acha. 3 to 5 years. No idea. According to you, according to your idea.
Probably 1-2 years.
Probably 1-2 years. How much?
If you are doing intraday, then 2 hours or 4 hours.
Correct. So it all depends. So there is no long-term, medium-term, short-term. It all starts from who you are, what you are doing. If you're an intraday, your long-term is 4-5 hours. That's it. Your short-term would be 5-10 minutes, 15 minutes. That's it. But if you're a fund manager of a mutual fund or a big institution, your long-term would be 3-5 years, 10 years. And then if you're Mr. Warren Buffett, your long-term would be forever. If he likes a company, he will never sell it. So there is nothing called long-term, medium-term, and short-term. It depends. So we don't have a fixed answer for long-term, medium-term, and short-term. But it all depends on who we are, what kind of a trader investor we are. Generally, the long-term we used to understand earlier or we used to accept earlier was 1 year because of the long-term capital gains that we used to enjoy before. Not anymore. So long-term, medium-term, short-term will depend on your trading style, and long-term, short-term, medium-term also depends on the stock. For example, you have invested 1 lakh rupees in Infosys, and on the same day you have invested 1 lakh rupees in NIT Tech. Situation number 1, Both the stock has gone up 20% in the next 3 months. Which one will you sell first? NIT Tech. Situation number 2, both the stock has fallen 20% in the next 3 months. Which one will you sell first? NIT Tech. See, what happens is the quality of the company or the quality of the stock, in this case, it being Infosys, you somehow have an influence within yourself. Oh, it's a good blue chip, large cap company. I have confidence and patience and hope that I will hold on to it, even if it's a loss. And if it's gone 20%, I hope this will go far better. So I will hold it on further. But if it's a NIT Tech or if it's a mid cap or a small cap, which has quickly given you some returns, boss, let's take it. Because when they turn fast, sharp. Correct? So your long-term holding of Infosys and your long-term holding of NIT Tech are very, very different in nature. Just by the nature of the company, your approach towards the time frame changes. Fine. But whenever we look into a chart, whenever we try to analyze a chart, we'll do a top-down kind of an approach where we look into the monthly chart, the weekly chart, and the daily chart. This is the beauty of technical analysis. What is the beauty of technical analysis? See, this is the daily chart, daily candlestick chart of Kotak Bank. Each and every candles shows us the price information of open, high, low, and close. And then at the bottom, we have the volumes. This periodicity is 1 day. The next candle comes Monday. Then the next candle comes Tuesday. So every candle is 1 day. Just by a press of a button, it can become week. Each and every candle is 1 week. Each and every candle is 1 month. Each and every candle is 1 quarter. Each and every candle is 1 year. Hold on. Each and every candle is 1 minute. Each and every candle is 5 minutes, 15 minutes, 30 minutes, 60 minutes. Try and understand the power, the blessing that this subject offers us. Means what? The same information, price, open, high, low, close. The only difference is how often are you calculating it? Are you calculating it every day, every week, every month, or every minute? Depending on that is your chart. Now you tell me. Adarsh wants to become an intraday trader. There was someone in the WhatsApp group who had mentioned, I'm a student, I'm 22-year-old, and I want to become a day trader. I don't remember his name. He wants to become an intraday trader. Has he got anything to do with the weekly chart or the monthly chart? Nothing. He is daily at max. Obviously, he will drill down to the 15-minute, 5-minute charts. So if you aspire to become a short-term intraday trader, will fundamentals help you? Will technical analysis as a subject, charts help you? Yes, I can help you. Means I can offer you, you try it out. Yes. If I want to aspire to become a good swing trader, I want to hold on to 1, 2, 3, 4 days. That's it. Usse zyada nahi, not more than that. Will fundamentals help me? Will I be looking into the 60-minute chart and the daily chart, and will technicals offer me a possibility? Yes, it is offering me a possibility. You don't want to do into trading. You're more into passive investment. Will you be able to do that? Yes, you will be looking into the weekly and the monthly charts and long-term quarterly charts and yearly charts. The concept remains the same. Whatever works in the daily chart will work in the 5-minute chart, will work in the weekly chart. So the beauty of the subject, when I first read about it in 2004, is if I get the concepts right, if I get the techniques right, I can actually play around any time frame. It's a fractal nature of the market. Means whatever is applicable in the daily chart is also applicable in the 1-minute chart. Like the macrocosm is the microcosm. All that I need to know is understand the topics. Right? So there is no as such defined long-term, medium-term or short-term, but you should look into the market. So whichever you're trading, we'll talk about this when we do trading strategies. A weekly, daily, hourly chart. If you're an intraday trader, I would suggest daily, hourly, 15-minute chart. If you're a long-term player, then let's say monthly, weekly, daily chart. Clear? Tenet number 3, and after that I will check the online questions. Tenet number 3, Dow Jones realized that the market moves in 3 different phases. There are 3 different phases through which the market behaves. Let's take an example. Let's say the stock is coming down, NBCC.
Fundamental is good.
Fundamental is good. Let's see the behavior. $140 coming down to 63. I seriously doubt that the fundamentals are anyways good. Anyways, if it's that your belief that the fundamentals are good. If the fundamentals are good, it should reflect in the price. Simple. If the fundamentals are good, it should reflect in the price. Your behavior is a reflection of your beliefs. You believe something, your behavior is different, means you're pretending. Anyways, let's come to NBCC. Stock has got hammered. I'm looking at the monthly long-term chart, 140 coming down to 63. The last time we saw these levels was back in November 2016. ठीक उसके पहले, right before that, the 60, 62, 63 mark used to be a resistance. Every time used to go up, and then the big breakout came, and then the rally. Now the stock is back to that 62 level. ठीक है? Imagine yourself as a big institution. Imagine yourself as Mr. Rakesh Jhunjhunwala. Okay, and you think at 60 level there is value at NBCC, that at 60 we should buy. It's dirt cheap, it's at a sale, we should buy NBCC at 60 rupees. You're an institution, you're Mr. Rakesh Jhunjhunwala. Will you buy 1, 10, 100 shares? No, you'll probably buy 10 lakh shares, 20 lakh shares, 50 lakh shares, depending on the free float, etc., etc. Fine. If NBCC you have decided to accumulate or to buy at 60, and today it's trading at 63, after a few days it comes to 60, and you decide that you are going to buy 10 lakh shares. Question number 1, kya aap 10 lakh shares will you buy the day it comes to 60? You thought at 60 I will buy 10 lakh shares. Next week it has come to 60. My question, will you buy all 10 lakh shares that day? No. Why?
I have to wait again if the prices will go down.
If the prices go down, it can come down. What else?
So will there be 10 lakh sellers?
Very good. 10 lakhs to buy, there has to be sellers to give me number 2. Very good point. Anything else?
Is there a limit?
No. If I become very, very aggressive and I demand to buy at 60 rupees, I will not get 10 lakh at 60 rupees. Sellers will be standing at 60 rupees, 60 and a half, 61, 62, 65. If I eat up all of them, what will happen? The price will spike up, shoot up to 67, 68. Will I land up buying at 60 rupees average price? Will my costing be 60 rupees? My costing will be 65, 66, 64. I'm an institution. Do you think I'm a fool? Do you think I will do that? No. So I will not impact the price. I will do it very quietly, coolly, without impacting the price. And the way to quietly, coolly impact the price is do it in a staggered manner. Let's see who are the sellers at 60. There are a few 100,000 shares. Okay, buy them. But don't buy too much, because if you buy too much, price will start to jump up. What happened? 1 minute. Okay, I think I need to charge the pencil. Just give me a minute. So you got the idea? So if you buy at Yeah, there's no charge. So it will take just 5 minutes. I'll just charge the pencil. So if you buy at NBCC at 60 rupees and you put in a lot of demand, it's going to spike up the price. You will not do that. So you will do it in a staggered manner. You buy at 60, it goes up to 61, 62, 63. Okay, wait, don't buy anymore. And it will come down a little bit, 59, 58, 57. Yeah, buy. So all that you want to do is your average costing should be around the 60 mark without impacting the price. This does not happen in one day. It might take a week or two or even a month. This phase is called accumulation. It's accumulating. It's called accumulation. Now, when a stock comes from 140 to 60, it's more than 50% sale. We are approaching the 15th August retail sale in India during the Independence August month. There will be sale everywhere in all the malls that you go. 50% discount, 60% discount, and flat discounts, correct? These 50% discount, if you see in a brand, it is essentially luring you to buy. So if a brand which you buy, which you wear, let's say a brand of whatever, clothes or whatever, if they give you a 50% discount, will you go and buy a couple of items more? Yes. So if there is a 50% discount, if the price comes down, the demand should go up. That's the law of demand. Correct? In the stock market, if 140 comes down to 60, the demand should be more. Half the price. Is that the case in the stock market? It's just the opposite. At 140, you will see a lot of buyers and a lot of sellers. At 60, you will not find a lot of buyers, neither will you find a lot of sellers. Though it is at a 50% flat discount, people are no more interested. It is sentiment. At 140, at what price did you buy, madam? Boli?
100.
100. 100 on the way up or 100 on the way down? When it was?
I'm averaging.
Okay. When was your first entry at NBCC?
120.
See? The fourth tenet of Dow theory is volumes, and it says that volumes should confirm price. Volumes should confirm price means when the market is going up and the volumes are higher compared to when the market comes down and the volumes are lower, this is a good market. It's a buyer's market, means when the market is going up, volume is high. On the contrary, when the market falls and if the volumes are high, and when it bounces back and the volumes are low, shallow, it is more like a seller's market and the markets are likely to come down. This is what the theory suggests, that jis taraf, whichever direction the volumes are more, that direction is dominant. If the market is going up, volume is more bullish. If the market is falling and the volumes is high, bearish. That's the theory. Doesn't work. In practical, I've seen it. We just saw it 2 minutes back. It doesn't work. Always it doesn't work. What did we see in NBCC? It will be very, very interesting. It will be amazingly interesting to look at the chart of NBCC on this particular day. By the way, because you have NBCC, has any news come out recently or 1 month back, 3 months back, 6 months? Any idea? No idea. I don't track it, so I have no idea, neither do I look at it. When you look at a chart like this, and you look at a huge move with such huge volumes, it's extremely bullish, right? That is extremely bullish is utilized by the institutions to exit. So the point which I've realized is at the peak, when there are extreme volumes, that can be a sign of distribution, not accumulation. On the fall, if there is an extreme volume, that can be a sign of accumulation. Now what Jatin asked, how do we know how much is more volumes? One is it's visual. And second, what you can do is you can compare. See, anything that you want to know in a better manner, you just do a comparative analysis. So what am I going to do here is I'm going to plot an average on the volume of the volume. Means what I have done with this red line gives me 20-day average volumes, 1 month average volumes. So these are the days where exceptionally high volumes have happened. So whatever is the monthly volume average, more than that. So you can have a kind of a benchmark. Similarly, when you come to the current situation of NBCC, these are some signs of buying. See, in this fall, in this panic, good buying happened. So these were the levels of around 92. There's some good volume happening here at 100, 103. So you know around 90 to 100, some big hands have entered. See this, once, twice, thrice. And what is the price range? Niche mein around 90, 92, on the top around 100, 105. So you know at 90 to 105, these big hands have entered. Have they gone right or wrong? Wrong. When it comes back to 95 and 100, what will they like to do? Sell out. So keep that in mind, that in the zone of 90 and 100, big volumes had happened and those guys have gone wrong. And those guys have probably started to again average out around the levels of 70, and see how consistently the volumes are higher. Now this can be a sign of accumulation. Or ek cheez hai, one more thing for Gopi as well and the others. The drawing that I've done here, accumulation, distribution, consolidation, are all rectangular, flat. Need not be. Accumulation can be falling like this. See, it's falling, and look at the volumes improving. Distribution can be rising and the volumes increasing. So because of the fact I've drawn a horizontal box, like, need not always be like this. Accumulation can be a falling market after a big fall and significant improvement, steady improvement. See, over the last 3 weeks, there's a steady improvement in volume. Mean these levels are getting attractive. Okay? That's how you are going to read so the concepts don't change, what Gopi was asking. So concepts don't change. The way you understand them is how you look at them. Fifth tenet of the Dow theory is averages to confirm itself. Averages to confirm rather each other. Averages to confirm each other is something like this. Let's say you have the behavior of Nifty and you're comparing it with the behavior of, let's say, mid-cap index. The Nifty and the mid-caps. Nifty is large cap, mid-cap is mid-cap. Nifty is quality stocks, mid-cap, small caps are speculative stocks. If the Nifty continues, let's say if the Nifty, okay, as long as the Nifty and the mid-cap, small cap, as long as the quality and the speculative sections of the market are moving hand in hand, they are in order. Higher highs, higher lows, higher highs, higher lows. Both of them are intact. This is a strong uptrend. If this happens, Nifty comes down, makes a lower high and lower low. Nifty has started to fall, but the mid caps continue to rally. Are both of them confirming each other? No. This is a sign of worry. The overall broad markets are not moving together. The large caps have started to deteriorate, whereas the mid caps are running. This is a sign of a bull market top. Let me give you an example. The August season, sales season is starting. In our times when we were in college, there was a jeans called Rough and Tough. I think Akshay Kumar was the brand ambassador, if I'm not mistaken. Let's say if Rough and Tough was today, I don't know, in Calcutta we don't get to see Rough and Tough. If I see the Rough and Tough showroom giving me a 50% discount, and next to that Levi's giving me a, let's say, 50% discount, flat 50% discount. where will you be tending to buy? And you want to buy a pair of jeans. You'll generally try to go and get Levi's if it comes within your budget, that is, because Rough and Tough budget and Levi's budget is very different. But more or less, Flying Machine and Levi's. Let's say Flying Machine. And Flying Machine is also an expensive brand. Okay, let's compare Flying Machine and Levi's. So if the market comes down, if from current market situation from 11,000, let's say if it comes down to 9,000 or 10,000, and you've been sitting on cash, now you will buy. Will you buy an Infosys or an NIT Tech? You buy an Infosys. You will buy Reliance. You will buy Maruti. You will not buy Tata Motors. So what I'm trying to say is, when the market falls, money goes into quality. When the market rises, money first comes out of quality. That's why mid caps move later and faster, and they fall also later, and they fall also much faster. So as long as averages are confirming, so how can you compare this? Always compare the Nifty with the mid cap, small cap, or the Nifty 500. You can do a comparative of the Nifty and the Bank Nifty also. Week on week, day on day behavior of Nifty as well as Bank Nifty. Nifty and Nifty 500, Nifty and small cap. So आपको एक अंदाजा, you get an understanding how are the sectors moving. Last tenet for the day is, as long as the market is in an uptrend, making a series of higher highs, higher lows, the market is in an uptrend. As long as the market is making a series of lower highs, lower lows, the market is in a downtrend. When you find a stock in an uptrend or a downtrend, do not question the trend. Just continue to ride the trend till the point you get opposite signal. The opposite signal is a series of lower highs and lower lows. So if you find a chart which is making a series of higher highs, higher lows, uptrend, make an assumption that the uptrend will continue until and unless you have confirmed signal that it has reversed to lower highs, lower lows. So the sixth tenet says that it is much more easier for the trend to continue than to reverse. It's far more easier. Say for example, we'll take up his example. Kamal. Kamal is a chain smoker, correct? Which brand, sir? Gold Flake, honeydew. Fine. Chain smoker for how many years, sir?
Not change.
How many sticks per day, sir?
4 or
5. I'll take 6. What is the price of each stick, sir?
10.
60 rupees a day, sir. All 30 days in a week, in a month, sir. 30 into 60. How much, sir? 1800. And when there is some Saturday, Sunday, or little party sharty, 6 goes to 8, 9. Correct. When there is some match going on, some 10, 11 people running after a ball, sir. All of a sudden. So can I take it to 2,000 rupees? A month? A year? How much, sir? 24,000. Let's round it to 25,000. How many years have you been smoking? 4 years. 25,000 into 4. How much, sir? 1 lakh rupees. If you had done an SIP with ITC or Hindustan Lever, let's say ITC, because Gold Flake is ITC. Last 4 years, you would have made, your 1 lakh would have gone up rather than going out and smoke. But nevertheless, if we ask Kamal, no, it's good you smoke. That's how ITC makes money. That's how other people who don't smoke, they make money. So you keep on smoking, okay? Not a problem. That's exactly how Apollo hospitals and Dr. Reddy's will also make money. Because when you need their medicines, they are the ones who make the medicine. So that's completely okay. I'm not motivating you nor discouraging you. The point I would like to take up Kamal's example was, Kamal has this habit of nicotine. If we do you think that it will be very easy for Kamal to reverse tomorrow and stop nicotine immediately? It's very, very difficult to reverse. But then if we give him a plan and he comes to a rehab center and we give him a plan, okay, from 6 sticks, first we'll do to 4, and then 2, then 1, then 1 will continue for a month, and then we will stop. You understand? A full plan where the reversal is happening, but in slow doses. Which one is more sellable? Which one sounds is a possibility? The second one. The possibility is you will never end smoking. This is the fact. Okay? Either you do the slow dose or the immediate dose, it is not going to happen. But which one is easier? The second one is easier. Right? So for the trend, for the price, demand and supply, or supply demand movement, it's far more easier for the buyers to continue. The bullishness is easier to continue. The bearishness is easier to continue. The reversal takes time. Reversal actually takes time. Amongst all these 6 tenets, the most important tenet psychologically is price discounts everything. We will not ask questions why the market is going up, why did the market come down, because everything is there in the price. Insiders know better than us. It's the insiders who decide the trend, who makes up the trend. We are going to make money in between. So they will buy, accumulate, they will sell, they will distribute. In between, they will create a trend. We are going to make use of that trend. बहती गंगा में हाथ, पैर, जो भी आपको धोना है, धो लीजिए. Do not try to pick the top. Neither should we try to pick the bottom. We will try to make the most of these trends. Now all these is possible. Books, basic books, there are quite a few, but the best book to start off with would be John J. Murphy, Financial Analysis of the Stock Market. This one. Then obviously there are books by Martin Pring, Technical Analysis Explained. This one is also pretty good. As we continue further, I will share books of others. For example, tomorrow we'll do candlesticks. I'll share with you few names on candlestick charts also.